I thought the research was fascinating. Financial services is such a broad base of different types of organisations that you might wonder if there are going to be any themes that are common between insurers at one end, asset managers, investment managers at another end. I thought some of the things in the research were not surprising. Some of the pieces about what's happening to budgets, etc., and some of the sentiment of where people see the next couple of years was expected. I thought that some parts of the research threw up some more surprising questions and probably starting points for further debate, especially some of the areas around what the reasons for people's sentiment were, or some of the ideas about structures for IT. I think there are other pressures. As money has returned to the markets, then that has its own growth. Even if companies themselves aren't necessarily growing for acquisitions or new products, then the scale of business being done has returned back to normal levels from where it was decidedly down. And actually that produces costs as well. And then there are the normal pressures. I mean, some things just get more expensive year on year, whether it's people or other resources, professional services, third-party contracts. And so you'd expect to see IT budgets increasing gently for those inflationary pressures.
Within a growing economic environment, clearly banks and financial institutions are going to be thinking more about how they can improve revenue results, and having a content and happy client base is obviously central to that. And I think all financial institutions recognise that the business and personal population have been through a very tricky time over the last few years, and therefore an agenda that's focused around cost reduction may well have an impact on their experience. And perhaps now is the right time to say, let's go back to basics. Let's go back and make sure that the core product that we're offering to our marketplace is one that really meets their expectations and hopes.
I think customers have changed in the way that they engage with technology. The whole consumerization of IT. Customers are much more tech savvy. I think the key themes for me are that they want to consume their banking services via their smartphone, via their tablet, not via their branch. I think branches will have to look to be a lot less transactional and a lot more about getting that real customer intimacy. And I think that the other way that banks will need to look to engage with their clients is through social media.
The industry has been helped by the fact that smartphones are now pervasive within society. But the industry has moved very quickly to develop apps and banking capability that give people an additional distribution mechanism, an additional way of accessing their account. And I think that has benefit for both parties. It's having a bank in my pocket enables me to interact with my bank in a much more efficient way for me and for it. But it also gives the bank the opportunity as well to focus its products around the most appropriate distribution strategy, most appropriate distribution channel to meet individual and personal and corporate needs.
Finding the right people is always a challenge. Certainly at the moment, the fight for certain types of roles and for certain types of staff is hotting up again, and we see the competition and some of the pressures on finding talent returning to levels they've been in the past. Not for every role, but for some. I think as much as anything though, it is about making sure that you've got the right balance of people who understand your business, trying to change your business. If every project involves bringing in an army of contract staff who come in, don't know your company, do the project and leave again with no skin in the game for the outcome, then that is one of the recipes for poor outcomes for projects.